airline ticket, which if any of you have tried to do airline miles to get a ticket, it's darn near impossible to get the kind of flights that you want without using 37,500 miles. So you have to be spending a lot of money on your credit card in order to be getting a free airline ticket. So if your credit card fee is $49 a year or $79 a year or $99 a year, making one phone call to your credit card company and saying, I'd like to be on a card that doesn't have an annual fee, what do you have? They'll say, well, I can switch you over to this one, but you're only going to get 1 mile for every $2 that you spend instead of a mile for every $1 that you spend. And you say, okay, let's do that. And they will send you a new card, no questions asked, no fee. So this is one of the ways that credit card companies have made rampant amounts of money, is in not only in the annual fee, but also in late fees. If you happen to have a late fee sneak in on your credit card, I found that they will usually reverse up to 2 or 3 of those a year if you simply call up and be very polite with them and say, I was on vacation, it completely slipped my mind. My husband or wife usually cuts the check and they didn't get it done. Is there any way to back this off? They will usually say, yes, you've been a good client of ours. We'll go ahead and eliminate that unnecessary fee. And I would guess most of your financial institutions will do the same on an NSF fee, assuming that it only happens maybe once or twice. If it's rampant, if it's happening all the time, then it's a problem. So there were two instances I'll tell you about that hopefully will give you a little insight into looking at your own statement. One was, I looked at a couple's bank statement. I used to own a mortgage company, and when we would go through and create all the documents for a mortgage, I would go through their bank statement to see if I saw anything that I might be able to help save them money. And no joke, this family did at least 6 insufficient fund fees every single month at $39 a piece. So $240 a month was going right out the door because their checks, they weren't managing their cash flow very well. And as it turned out, when they sat down with me and I said, I'm noticing, $3,000 a year is just emptying out of your family's money bucket because you're not managing cash flow well. And she looked at him, and he had kind of a sheepish look on his face. And apparently what was happening was when he went to work in the morning, he would stop at Quick Trip, and he would get a Danish and a coffee, and he would spend, about $3 a day. Well, that's about $20 a week. And that $80 a month was enough where he wasn't telling her he was doing it, and she wasn't keeping the checkbook well enough to know that was going on, because she was just balancing it as she wrote checks, not comparing it online. That as the checks began to clear, they wouldn't clear, right? And so we went through a budgeting process, a spending plan. He went to a cash system where she gave him $20 at the beginning of the week. That was his coffee and Danish money. When it was gone, it was gone. He never once, in fact, she took away his debit card, so he couldn't use it. But it was a cash system. And so that's one area where a spending plan comes in handy, because it's purely a cash flow issue. The second one I saw was a certain very large bank based in Des Moines that I shall not name has an account that would allow you to, if you had a direct deposit, if your paycheck direct deposited into your checking account, you could do an advance on the direct deposit once a month, but they would charge 10% on whatever that direct deposit was, on whatever the advance was. So this particular situation, I saw this check statement, or the bank statement, and it was very convoluted, the way that the deposits and the withdrawals were happening. But essentially, every 2 weeks, because that's how often the direct deposit happened, this woman would get a $500 deposit that would come about 4 days in advance of her direct deposit. How are you? Yeah, come on in. So I was noticing this $50 charge every time that the $500 was deposited into her account, whether she needed it or not. And it was called a direct deposit advance program. And if you annualize it all out, the APR on this program is over 120%. It would be like having a credit card and using it every 2 weeks to take an advance, but them charging you 120% APR on that deal. So there are programs out there that are, they're meant to be helpful, but in reality they're really not. And so I'm sure this is not the case for all of you because you're all members. of Capital View, so it doesn't happen there. But some of these banks are literally overcharging, and this is where a majority of their income and revenue is coming from, is in fee revenue. So we have to be really careful on some of these unnecessary fees, because in my mind, this is a gigantic hole in most people's boat that they don't even realize it's there. So that's what we're looking for on unnecessary fees. Did I miss any of these? Anyone think of any unnecessary fees that I missed?
Would that include like ATM and debit?
You bet. Yeah, you bet. Which may be you're using an ATM that's, you're in a different city, or it's not local to you, or going to your ATM is not super convenient and all of that. So Capital View has shared branching, right? So you can use
The shared branching and also the privileged status ATMs.
so any privileged status ATM you can use. If it's charged, is there a charge on the privileged status
No.
one? Okay.
What is privilege status?
It's a network of ATMs where if the institution is a member or part of it, which Capital View is, it's basically no fees on the transactions that they do.
Those are usually posted, aren't
Yeah, there'd be a big pink privilege status sticker.
they?
Somewhere
Is there
on
one
there.
over at the Capitol building then?
Yep. There's one in the Capitol building. We've got another one in Lawless building, and there's both a sticker on there.
Do they have to tell you up front if they're gonna charge you? Is that
On the
a,
ATM,
yeah,
you'll usually get a screen that says to process this transaction, a fee of $250 will be applied or something to that effect. Yeah, you can cancel out at that point. The other one that isn't really mentioned, and it's somewhat low on the expense totem pole, but it might be magazines or subscriptions that you have on an ongoing basis that you never, magazines are stacking up, you're not reading any of them, and it might be costing you. That's something you want to get rid of. One of the ones I found here in the last 2 weeks was I'm using my home phone as a business phone a lot more, and I wanted to get unlimited long distance on my home line. And I called CenturyLink and said, here's what I'm looking for. And they said, oh, by the way, would you like 5 megabit per second internet speed? You have 1.5, and we now have 5 or 12. And I said, well, how much extra is 5? And he went, and he said, oh, actually, I can get you unlimited long distance and 5 megabit per second upload and download for less than what you're currently paying for your current phone service. So what happens is with technology, everything's expanding. Our ability to get more for less is expanding. I would consider calling your phone service and saying, is there a better program than what I'm currently on? You may be able to shave another $10 or $15 off your bill for that. So food for thought. Incidentally, there's a thing called Moore's Law. Moore's Law, a gentleman named Moore, who was the founder of Intel, said that data processing speed and storage is doubling about every 18 to 24 months. And if you think about that, that means that 20 years from now, technology will increase 33,000% from where it is today. So, scary. We'll simply be able to look at a check and it'll go right into our account, so it'll be really cool. All right, so let's talk about planning. It said people don't plan to fail, they just fail to plan. And really we're talking about two things, a spending plan and a savings plan. It's that simple. And the last plan on this is really just working the plan, which for some people becomes the most challenging part. It's like, well, I put this great plan together, I'm just not following it very well. So the spending plan is what we're talking about, fixed and variable expenses. The savings plan, in my mind, is very, very simple, and it boils down to one thing. It was written about in a book called The Richest Man in Babylon, which was a popular book decades ago. Still one of the best books on finances I've ever read. The number one thing from that book said, 10% of everything you make is yours to keep. So if you do that very well, it means that 10% of your paycheck when it comes into your checking account ought to be earmarked to go right to a savings account. Before you ever see it, before it ever passes through your fingers or ideally your checking account, it ought to go right to a different account. And I'm just going to ask, is it possible to segment a direct deposit to send a portion to checking and a portion to savings? Okay. How many of those can you do? Can you send it to 2 or 3 different accounts, or unlimited? So what I would encourage you to do is figure out what is that savings plan that you really want to implement, whether it's saving for a vacation, saving for college, saving for a rainy day, just an emergency fund. What is the savings plan you want to implement? And then automate that as much as humanly possible so it's not about you having to do it, it automatically does it. An interesting, I don't know, it's just an interesting fact about human behavior is if we have to do it, sometimes we won't, but if it's automatically done for us, we start to live on 90% of our income and we never know the difference. You know, if you suddenly had $150 less in your paycheck, you would begin to, you know, even things out on how you spend your money. It might be a stretch the first check or two, and after that it's kind of like, well, this is just what happens. And at the end of the year, you realize you have $3,600 in a savings account. That's either a vacation or down payment on a car or whatever you might need. So we'll talk about the spending plan. You should have at least 3 savings and investment buckets. Number 1 is just a pure savings account. And I like to call it a save account. Because how many of you honestly have a savings account? Realistically, is it more of a put and take account? You put a little bit in, take a little bit out, put a little bit in, take a lot out. It's a put and take account instead of a savings account. So I want a save account. When it goes in, it doesn't come back out again. And those save accounts are money markets, which is basically a savings account on steroids. Gets a little bit better interest rate. Money markets generally have a limit about how much can be put in. Is there a limited capital gain? A minimum
Yeah,
on
well,
money markets?
there's
Depending
no,
on
the interest rate, $1,000 minimum,
Okay.
and, but the rate goes up when you get to higher levels.
Yeah, okay. Which is pretty typical on most money market accounts. So $1,000 minimum, what I might recommend is you start the savings account. And in this case, it could be a Christmas club account or some other type account that you're earmarking money for savings purposes. And you could have an emergency fund. You could have the new car fund. You could have the vacation fund. And all of those could be separated. And then when it gets above a certain amount, that emergency fund needs to go up into a money market. And it just sits there. And that's that rainy day account. A good friend of mine said, you know what's strange is when I didn't have $1,000 in savings, my car broke down all the time, my air conditioner wouldn't work at home, you know, windows would break, and then all of a sudden I got $1,000 in savings and my car never breaks down, my air works all the time. So not having an emergency fund is sort of like inviting Murphy into your home. Y'all know Murphy? Murphy's Law, when something go wrong, it probably will. So if you don't have that emergency fund, it's like inviting challenges and problems into your home, where having it sort of protects you from that. And in all the data that I've seen, it says that most families are literally one economic catastrophe, which could be a car accident, a medical emergency, you know, those kinds of things. They're one emergency or catastrophe away from bankruptcy. And what I'd like to see is I'd like to see us have 3 to 6 months worth of living expenses in savings. And I know that's a bit of a stretch. It may take a little bit of time to get it, but once you have it, the peace of mind that you get is phenomenal. So we have save, money market, holiday savings, and short and medium term savings. So a short term savings might be the vacation at the end of the year. A medium term savings might be, you know, we know our house is going to need a roof, so we're starting to set that aside every single month. That might be medium or long term. Investing for retirement. Hopefully you all are participating in some sort of retirement plan with your employer. And hopefully in addition, you might be doing something like a Roth IRA or some other retirement vehicle. Fact of the matter is, most Americans right now are going to be short when it comes to retirement savings, according to most of the data. But if it's always possible to build up those savings over time, it just requires that you do it in the near term. And then college savings. Anyone have young ones that are heading towards college or thinking about it? Anybody? Yes?
I have for my grandchildren.
You do? Okay. And you're saving for your grandkids?
Yeah.
God bless you.